Good morning, everyone. Welcome to the tradingsyndicate.org. I'm JJ, and we are back at it again. Hey, Ronan, Jam, what's going on? Okay. So, one thing I think it's important, and I just realized, somebody started talking to me, and they started putting out, it was like, those old news, what do they call it? They call it a telex machine. So every time this particular gentleman, and I'm saying this with affection, right? Because he's like a brother to me. When he says good morning, it's like right? And it's like all of the news headlines, and you can see that they're influenced by the news already, right? I want you to bring your attention to the chart. Now, I'm not saying it's wrong, but I'm saying you've got to clear your mind. Green 007, were you talking to me after you signed up? If you DM me, you have to tell me your screen name in Discord. If you're in my Discord room right now, just go to the JJ Live ES section and say hello. And then that way we'll make sure that it's me and you. Now, if anybody asks you to follow them into trades, if anybody asks you to pay for some sort of an alert service, anything like that, it's a scam. Okay, I won't ask you for any of that. Okay, and welcome to the folks joining us on YouTube. Now, getting back to this news stuff, right? Folks, you got to trust the chart. You really, really have to trust the chart. What are we seeing on the chart right now? Well, we had a trend up, right? And then what happened? We had a little bit of liquidation yesterday at the end of the day. I would not have messaged you first on Discord. Hang on a sec. Okay, now that we got that cleared up. No, that wasn't me you were talking to, Green. I hope you didn't send that person any money. Okay? If your screen name is the same in Discord, I'll search and see if I can find you. Right now, I've got to get on with this YouTube. Okay? So, we had trend up, and then we're back inside yesterday's range after doing a look below and fail in the overnight. Okay? So how much inventory do we have above us? And how much inventory do we have below us? Well, the entire S&P 500 since the inception is underneath us. We have 1 day of volume above us. Should you be short biased? Let's say you are short biased. Let's say you are. Is the chart confirming your bias? See, I'm talking about this because I used to have a hell of a problem with bias. Okay? And it still creeps in there. All right? So I'm not telling you anything that I haven't had to work through. It's not like I magically don't have any biases. It's not like I magically trade the right way all the time. Right? I'm wrong plenty of times. But what I did was learn how to correct myself and learn how to check myself. And damn, it was hard. Okay? Because the bias keeps telling you, oh, just go short the market, go short the market. Do you see a seller? I don't see a seller. If we saw a seller, we'd be trading underneath 63.30. Right? Because we would have taken out that level where all the short-term inventory is. This is an inventory correction. Now, folks, this morning I was talking and somebody asked me, what is inventory? Right? Inventory is what this chart is keeping track of. If we were selling oranges or apples or bananas, this would be a chart of the sales of that particular fruit. Here we are trading ES contracts. So the chart is just a sales chart of how inventory is going. Yes, I'm sorry about the hacking on Discord, but this imposters and things like that is getting it's all over Twitter, it's all over everything. I'm glad you asked. Yeah, no, I would never ask you to link platforms. Can you DM me in Discord Green and report it as spam? Thank you. All right. Now let's get back to work. Okay? This is an inventory correction, which means it is a slight period where the product is put on sale. Now, when you put the product on sale, does that bring in sellers? Or does it bring in buyers? No, I agree with you, Howard. It is annoying. But everything's getting hacked these days, and it's a pain in the butt. So, overnight inventory is short. Okay? This is something that will help you. Where's the close of yesterday? Well, the close is here. Right? And this is one of the things where market profile is helpful. Now, you don't have to have market profile to trade, but it is very helpful because what it does is it very quickly tells you where the inventory is priced. So, overnight inventory is short because at least 70 to 80% of the transactions of the overnight period, the Globex period, are underneath the close. So there's a 60 to 70% chance that we do this. Now, if we don't, it tells us that there's really heavy selling at a certain level. And then it's okay to short. Okay? So that is what you need to be aware of. Oh, hang on a second here. Oh, okay. What's that? Yeah. So we're looking for a move higher. Right? We're looking for a move higher. All right? If that doesn't happen, then of course there's a short. Right? So let's go take a look and see where we're at. There's our overnight inventory. If you watch the earlier video that I did this morning, I worked on showing you guys how to build positions when it's really, really choppy and you can't scalp. Another tool that we have is to build positions, right? So if you know inventory is short, you can build a little long position and then sell into strength, right? Oh, good stuff. You got back in there. I am listening. Good to see you. Okay. So we are still, right now we're above yesterday's close by a few ticks. The upper stops are just under 63.50. The overnight high is a poor high. We had competitive selling there, right? That's what pushed the market lower, right? And that's good because what we've done now is we've done two things. All of the people who got trapped long yesterday, above 63, what do you think is the percentage of these people? I've got two questions for you folks, right? And Jam, I want you to listen to this, okay? And concentrate on what I'm saying, okay? What do you think the percentage of people who bought above that B low, above 62, what do you think the percentage is of those people who got flushed out last night into the close? What are the percentage of people do you think are still long up here in today's speculative markets, right? So if we cut this profile here, you've got 500,000 contracts up here. You've got 282 here. That's the liquidation. That's your liquidating inventory, right? And we've done 111 here. So let's see how much buying retention is in this market. Okay? Smart longs, Jam? Also, what other kind of longs? Right? What longs would be staying up here? And how many of them would have like bought position down here and added to that? Because the market's at all-time highs. Just think about it. It's a huge hit for you, Travis, and it's a huge hit for me. For other people, it's less than what they spend on plane fuel for a weekend. So you guys, you have to understand the amount of money that's sloshing around these markets. You guys have no clue. And I didn't either until I got into the business, how much money these people have. Right? They also have multiple accounts where they trade around a core position. So they could be swing long and they could be short in another account. Right? So all I'm trying to do, I'm not trying to get you guys long or short. I'm trying to get you to think. Right? Before you start expressing your biases, right? Think about where you are, right? Think about where you are and think about how much inventory is above you versus how much inventory is below you. There's the position. It's right here. There's 1 day of inventory above us, right? So they flushed that out. The shorts came in and started to buy, right? Right? You flush a market out. The shorts came in and started to buy because the point of control was here, then it moved down, and now it's moved back up. And that is classical short covering when a market takes out a previous day low. I've shown you guys all that video. We might have to do it again in one of our price action labs, right? But when you take out a previous day's low, It's like opening a trap door and all these contracts fall out. If you're short from down here, you're going to sit there and bid the market. There's another thing too, is tactically. Look at this, folks. Look at this, right? Right? Remember Hans and Franz from Saturday Night Live? Listen to me now or hear me later, right? Look at that overnight low. It did not take out the point of control from 2 days before. This is an inventory correction. If this was real selling, it would have gone through that level like a hot knife through butter, right? Were you looking for a move higher because overnight inventory is short? It's as simple as that, right? The shorts have covered already and they've taken up all the cheap inventory under 41. Pretend you went to a sale. You know how you go to Nordstrom Rack or Saks Fifth Avenue, the discount place? Well, the cashmere sweaters were here and everybody like grabbed all the cheap cashmere sweaters. Now you have to pay up. All the cheap inventory is gone. Remember, folks, it's a market. It's a market, right? Okay? So we flushed out trapped longs into the shorts, covering hands, right? We talk about this every day. Now, what have we done? We flushed out that inventory, and I'm telling you, if we don't take out yesterday's low or the overnight low, be careful shorting. Okay? That's all I'm saying. I'm not trying to preach. I just want you guys to make intelligent decisions based on fact. Right? Don't think about Powell. Right? He's not going to do nothing for you. Okay? If he's talking, just be careful when you're trading. Right? If he's talking, be careful. Right? Make sure you always trade with stops. Right? The other thing you got to remember too is this is a market at all-time highs, which makes the order flow unpredictable. Okay. So we're going to open just in that liquidation area of yesterday. Look for it to go back and forth, right? Be a little choppy. I'm using 63.46 to 49.5 as my balance. Hey, Richard, how you doing? Yeah, good stuff. And report him, please, Aries. If somebody sketchy message you, please block them and report them. Okay? Hey, Gators, sure thing. Okay. So right now we're in a little distribution between 47, 48, and 49. We're getting rid of that inventory that they picked up under 42, right? You can see that right here. There's accumulation, distribution, okay? If we get any selling, we'll come back down to the 42s. Let's just go and see where VWAP is before the open. Make sure I've got it in the right spot. Right? So you have accumulation underneath VWAP, you have distribution above it. That's how business is done. Very simple. Now we're correcting inventory a little bit lower. Right? We ran out of buyers at 48. We put it on sale and see if they'll take it at 47. If not, we're going to come back down and take out these stops. Okay? One thing on days like this, after a liquidation, I always expect the previous day low to get tested. Okay? Now, before the market opens, 5 minutes, remember I was saying I was looking for this move up? Right? I was just saying that. What is it showing me? It's showing me that we have sellers at 49. So, aha, now you're short bias. If you are short biased, right, and you want to take a short trade, right, where should your stops be? Where is your risk if you're short? Or if you want to short this market? Can anyone tell me? Where is your safety valve? Where is the exit that you would jump out of the plane? 49. Thank you, Matt. There you go. That's your exit. So if this thing opens up and it can't get over 49 or 50, then you can short it down to 46 and 44. But if it turns around at 46 and starts moving back up, be careful. Right? And that's how you play these opening ranges. You trade between the stops. Right? So if we open here and go here and take that out, then we're going to tag that overnight high. If we open here, get here, and stall, we'll rotate back down. Right? So that's... Now, if you're not... You don't have to trade the open, okay? A lot of people feel that they have to trade the open. You don't. If you're a newer trader and you haven't figured that stuff out, don't worry about it. Right? You got a whole day to trade. You got all the time in the world. So just relax, let the market open, right? And then let it start to make sense to you. If it doesn't make sense, you don't need to put money at risk, right? You want the business to make sense. I'm shorting because they have to put the crap on sale, and I'll short down to VWAP. I'm going long because nobody needs to sell it underneath 50, so I'll go long, right? Real simple, right? And if you can't execute it, just sit and watch for a while. Because the more you watch a market, the more you'll understand the subtleties of the price action. And when you do that, when you actually go to trade and you practice your trades and you do the same trades, right? When you're doing FOMO trades and all that crap, there's no consistency. You're just taking trades, right? You're just like a dog chasing its tail, right? But when you actually think about the trades that you're doing and the business reason for taking those trades, after a while it'll start to become clear. You'll look at it and go, oh crap, I shouldn't be trading that. Or, oh, these candles, no, this doesn't look right. I'm going to stay away. And that's the smartest thing you can do because it saves you money, right? It saves you money and it saves you mental torture and anguish from getting stopped out, right? And when you do get stopped out in your trading, use that information to give yourself market intelligence. Your transactions will tell you, right? If you're long and you have sell orders out and the sell orders do not get executed, it means that somebody's undercutting your price. If you're short and you have buy orders out and you can't buy where you want to, it means somebody's buying it before your level, right? Either way, you're getting front run. And when you get front run, you have to adjust the price that you're willing to do business, right? Very simple, right? And if the market's got these tiny ass candles here and it opens and it's like that, you don't have to trade it, right? Let the market fit the way that you want to trade. So we're going to open in a minute, right? I have no idea what it's going to do, so I'm just going to watch it open, right? See where the bids and the offers start coming in. Remember, relax. You know, a lot of trading rooms, they're screaming at you, going, "Oh yeah, get ready for the open. Let's go, let's go." Just relax. You can't think when someone's screaming at you. And besides, you don't have clients, so you don't have to worry about executing quickly for someone else, right? Just take your time, zone into it, right? Usually after a liquidation, Matt, I expect it to try and test the overnight low. If we can't get down there, it means that the shorts are trapped between the overnight low and where current price is. There we go. So we're open. Coming into VWAP, let's see what kind of bids we get. See how we stopped right at that stop? Let's see if we take that out. If we can get under VWAP, you're looking for 42 and a half. There's that previous day low. No problem, Green. I'll be here. Well, actually, I'll be gone for about an hour after this. I've got to run to the old cardiologist, but then I'll be back. Looking for the previous day low. Watch the reaction as we get down here. Let's see. There it is to the tick. Right? So I was looking for a move up off the open. Did we get it? No. What was the foreshadowing? The sellers here at 49. Right? Now it gets accepted under the previous day low. You'll look for the stops down here at 36 and at 3/4, 37. This is short covering at the previous day low. If it's got any legs, it'll get back up over 41. I would not go long until it gets over 41, 42. Right? I'd let the large traders work this area out because you can see that there's a seller at 41 and a half, right? 41 and a quarter. Every time we get up there, somebody slams it, right? So if we get over that, it'll start turning the numbers up here. There you go. There you go. Right? Just make sure you sell into strength, folks. Okay? If you are taking trades, it's a two-sided market, which means don't take things for granted. Sell into strength, cover into weakness, right? Do not wait for an invitation. Right now we seem to be accepting back in the previous day's range. Remember, if you are buying product here, right, you're going to have a little bit of a seller at VWAP, and you'll need a serious bid to get over VWAP at up to 44, 45, right? But we're accepting back inside the previous day's range. So I bought 42, and as soon as we got up to VWAP, right there, right, I kicked out the trade because I knew there was going to be a seller, right? Not the greatest trade in the world, right? So there's sellers. That's okay, right? Let them sell, right? Let those large shorts come in and cover, right? There's a little bit of product. That's good. Remember, next week is month end. Can't believe this month is over already. So, if you're long, off of these 41s, there's going to be sellers at VWAP, right? So govern yourselves accordingly. Make sure you sell into strength. See you, Green. Hey, Wen. JR, how you doing? You build a little position, remember to get rid of it. In two-sided markets, it's always good to sell into strength, right? Grab a few at 41, sell them at 43, 43 and a quarter. Got two left, right? If I can't get 43 and a quarter, I'll hit the 43s. They don't want them at 43, I'll sell them at 42 and three quarters. I don't care, right? All I want to do is get rid of my inventory and turn it into cash. Because I know the next trade and I'm out at 43 and a half, right? I know that the next trade is always there. So I don't need to hoard a position, right? Hey, Jeff, thank you. Now we're past VWAP, we're looking for 46, right? And it'd be natural to assume that there's going to be some resistance here. Why? Because there's inventory here. What is inventory? It's time and volume traded over a level. So you'll expect resistance at that level. Does that make sense? That's what creates resistance. Okay. Now the only way to blow through that blue zone is if we get enough people trapped short underneath, say, VWAP or underneath 45. If we can get some big players trapped short, when they go to cover, it'll rip. And that's what causes those big green candles. But under normal circumstances, you should see some sort of resistance here as you come into this area. Thanks, Jeff. If we take out the close and we take out the opening range high, it's going to trigger some stops. Those stops are buy orders. Watch. There. See? Those are the buy orders I was talking about. So I think we got some people trapped under 45, 46. Nice little move up off that liquidation. Now we think, oh, is there continuation? Or are we going to backfill, right? Because we just came from 40 all the way up to 49. Now let's see if we need to put it on sale down to 46. And will that bring in more buyers? Let's see. Or is it going to bring in sellers, right? And this is how you want to think about things when you're trading. Textbook look below and fail, right? It's a good trade to have. It's funny, Steve put out this thing, and it was funny. He did a survey going, is the look below and fail an actual trade, or is it just something to watch? And all these people were like, oh, it's just something to watch. I'm like, okay. So it means I got a lot of teaching to do because people actually don't know that it's a part of the business. It's like, whoa, okay, I got some work to do, right? It just shows how many people really have no clue what's going on. You know, it's, how come you know the traders are trapped short? Because Sonny, trapped shorts are the first people to come to the bid. Right? The trap short is the first person to buy. Why is that, Sonny? What is a short sale? It's an open position. Closing it is risk off. They need to close their position, so they have to buy. They're the first ones to the bid. Now, you guys wouldn't know this because you trade retail, but in the old days, when we do a short squeeze and you actually talk to traders on the phone, you knew who was short and you knew who was long. Right? It's a little harder now, but the mechanics of the business have not changed. The efficiency of the business has changed because of electronic trading, but the actual mechanics and the agenda of a market will never change. A market is there to distribute inventory. It's to distribute inventory from smart money into retail hands for profit. Just like Walmart exists to sell you stuff and they make a profit on it, right? That's why grocery stores, markets, flea markets, any kind of a market. This is an ES market. There's a stock market. Right. Oh, that's good. Nvidia's down. Yeah, still has a fairly decent gap to fill. 168. Little profit taking. That's okay. Right. Notice on this liquidation, came down, looked below and failed 46 again. Right. The first people to buy on a liquidation are short sellers who are covering. So what happens is when a market sells off, smart money shorts come in and buy. Wholesale builds a position on top. We come in and start buying. And then this is caused by the dumb money shorts who shorted here. They go to cover at the top. It's always the same. Never changes. Right? So we're just going to go back and forth. Maybe we get a nice rotation going, eh? Like a nice rotation like that. And then we can just trade it back and forth in the box. I like those. Those are always nice. So you just wait for the bottom and see if it actually puts in a bottom, right? Well, Rolly, we do need some liquidation, so I hope your opinion is right because this market needs some liquidation. Right? I don't trade Nvidia, so I wouldn't know. I'm looking at it on a 5-minute, and I don't think it's in any real trouble until we get to 166 or 165. But that's just me. It would be good if this thing sold off. Let's go take a look at the daily chart on Nvidia. Oh yeah, it's a look above and fail of 172.37. So it's got this gap to fill. I'd be looking for 165. There's a little position here at 165. It'll be good to clean it up a bit, right? This thing, on the other hand, is just back and forth, back and forth. You don't like VWAP in the middle? Yeah, it's a bit of a pain, isn't it, Moran? Right? So here's the facts, folks. Trades are really based on two things, right? The business reason for your trade, right, is either based on the fact that there is no supply, which means you should be going long, or there's too much supply, which means you're going short. Right? I'd love to see what's underneath this overnight low for bids. This area down here, I'd like to see it trade and see what's down there. And we might just get that chance. Is it Tesla that's got earnings tonight? Or they already had it? Here we go. Now, if we get under the previous day low and can't get back up above it, don't go long. Okay? Something to be aware of. see where we find a bid. I'll just wait for the edge. Right, I like to let the larger traders work this out. Look, the volume point of control is right at the previous day low. That's all short covering. What does that mean? That means that buying is not to be trusted. The only way that buying is trusted is if we run out of supply. If we run out of supply, the market will get back over 42. Right? If they start selling this off now, right? There we go. And what did I say? Short it down to 37 is going to be your first target, 37.5. There you go. Nice. Any plan to have a meeting this week? I'm sorry, what? Oh, I was thinking of doing a spaces, but nobody really wanted to have any. I think there were like only 2 people who said that they would show up to it, so kind of not worth it. I was going to do a spaces maybe today or tomorrow on Twitter, right? I don't really use value area high as an entry, Ali. I use the candles. So I don't know. I wouldn't be able to like. What's your reason for buying it at Friday's value area high? And where would you put your stop? So there's Friday's value area high right here, right? What I would prefer is a look below the overnight low, break it, and fail and come back up. I'd prefer that. Because there's value area high and we're underneath it now. Oh. Yeah, I don't really trade like that anymore because it never worked for me. That's why I stopped using market profile to take trades. And I started using the candles to use to take trades because I found that market profile doesn't really work in markets that have large ranges. It's very difficult. There's no place to put your stop. See, in the old days when ranges were 20, 30 points, you had a lot of structure to put your stop. Now, sometimes it's 20 or 30 points between stops. So it becomes kind of useless. So there's 4 things in market profile, practical things that you can use. One is where's the inventory. Number 2, poor highs and poor lows. Number 3, single prints. Right? That's what you really want to focus on. Right? You really want to focus on that. Yeah. So I said there was a 60 to 70% chance. That's stats from Peter Stadelmeyer. And what else did I say? I said if there's a seller and it can't get above 50, then it's going to rotate lower. Right? So guess what? You're wrong. I was wrong. Right? Big deal. Right? I'm not a genie. Right? That's why you take shorts. That's why you learn how to short. Right? So if you were right, that's great. Right? Did you trade it? It's okay. You're allowed to show off. Right? People have egos. There's nothing wrong with that. I don't mind admitting I'm wrong. I do it every day, at least once a day, right? In trading, you have to be okay with being wrong because that's how you can pivot. If you can't do that, then you're going to get into some serious trouble. This is good liquidation. We needed this. We really needed this. I'm happy to be wrong. Right? I'm happy to be wrong. And we're coming into that area. Remember where we stopped out last time? There's that poor low. We broke it. There's the value area low from the other day. We broke that. Now let's see where we find the bid. A little bit, yeah. We're now underneath the cost basis of the last 3 days, which is good, which is healthy. That's why we're getting some short covering here. You see, right? Took out the poor low, right? Look at all the shorts coming into cover there, right? If you're looking to buy a dip, don't do it now. Wait until the market comes back over 26. Now you're going to be able to tell where the seller is. Let's watch and see where the seller steps in. Right? Remember, that's that area that we were interested in over the last couple of days. Right? Look at all that short covering. Isn't that beautiful? That's really nice. That's a nice rip. So I also said, I'm curious what kind of buying is underneath that overnight low. Now we see there's some decent buying under that overnight low when we took out that level, right? Sorry, just clicking in and out of these trades. I'm long 25 and 3/4, selling 28. I did the look below and fail of 25. So I bought 25 and 3/4 and I sold 28 for a couple of ticks. There's seller at 28 and a half. Right there. You can see him. That's good. That was a good liquidation. Now, do you think we get some follow through selling? Right? Long 26, selling 29. Sell into strength, my friends. Sell into strength. And I'm flat. Right? So the trades I took were the look below and fail, the first one, and then when it retraced and it didn't take out 25, I bought it again and sold again. Right? If I miss the short, I don't mind. I can always take the counter inventory long. Right? A lot of times I'll miss the short. Right? If I'm not on the ball, if I miss it, if I'm long biased, whatever. If I miss the short, not a problem. I wait for the look below and fail. And in markets that have good short positions under them, you can do okay doing that, you know? Now watch 25, see if we get underneath. I think we'll get underneath 25 again. Watch, here we go. Right? Bring in some more sellers. Go and find a nice low. Oh, there's another look below and fail of 25. Right? If it's trading too fast for you, don't worry. Wait till it slows down. Right? Spend some time watching. Another good thing to do is to go and rewind the charts after the day in an area that you might have missed something where it was contentious, where you couldn't figure it out. Maybe you hesitated, maybe you screwed up. I always like doing that. I go in and rewind the chart to see where I made mistakes, right? I find that's really helpful. What can you do if you tried to buy in the liquidation several times, a long position, and got stopped out? Stop trading. It's very common. Stop trading, take a breather. Because if you get stopped out quite a few times, what it's going to do is it's going to start messing with your head. And then you'll have the tendency to trade and put on size and stuff like that. Okay? So it's always good to take a little bit of a break. Happens to everyone. Every trader this happens to. Right? Because if you get stopped out 3 or 4 times, right? Always step away. Always step away. The market's not going anywhere. Right? Where's Nvidia bid? Oh yeah. Caught a bid at 164. Not bad. It's okay. This market needs to liquidate. It needs liquidation in the worst way. There's a seller at 25. They're fairly aggressive. So it's going to go sideways here for a little bit. Right? This is that shorts coming into cover, long selling into the cover, shorts trying to get it cheaper. Then the order flow runs out, then the shorts have to bid it up. That back and forth, that's what you're seeing right now. Hey Derek, how you doing? Yeah, this liquidation is really good. You know, like I said, I was wrong about the move up off the open, and I'm actually quite happy to be wrong because now we're going to get some really nice price action because of the liquidation. That's sweet. So when it's doing this, I have no desire to take a trade until we get back over 25, 26. And what I do, I know that there are going to be sellers on the way up, right? You can see, look, it hit 25, sellers stepped in, boom, hit it, right? So no reason to go long yet, right? If you're a fast shorter, you could have hit the 24s and covered the 21s. I wasn't fast enough to do that. Right? That's why I like to leave this. I'll leave this to the algos and the electronic execution and the large traders. Hey, Neb. All good stuff. I'm glad to save you money, man. Now let's work on making you some money. Right? Point of control moves down. Good absorption. I'll wait. I got to run to an appointment in half an hour, so probably best for me to maybe not trade. You definitely don't want to be slow-witted in a fast market, right? I always like to let the large traders work out the low, right? It's less work, and you can just kind of relax, right? There's a... Oh, cool. Yeah, Edgeful is interesting software. Andre's a smart dude, the CEO. So much needed liquidation we have here. Now, as we creep up on 25, I'm expecting there to be a seller somewhere here. There they are. Might take more than one candle to establish it over 25, folks, okay? Just remember that. See, there's the seller. It's amazing. Right where they were before, they always come back. Top of that candle, top of that candle. If we break the top of that candle, then 27, right? Really fascinating how that works. And it's so simple. You don't need any special software. These are 1 minute candles, you know? Nice work, Hank. See, and the way where I go wrong all the time, you see this green candle that broke above 25? I used to always get sucked into that one, buy it, and then get stopped out. And then a couple of minutes later, the trade works after it cleans out all the sellers there. Now you take that 26, right? I'm long 6 at 26. I'm out at 27 and a quarter, and I'm flat. Right? This is where I always go wrong. This time I didn't do it. Right? I think I have you guys to thank. I always get in here, get stopped out, and then the trade works. So I didn't take the trade here. I waited until it came back over 25. Took the 26s, just right, just in and out on 6. Just quick ones. Now, next place you're looking for a seller, is going to be up. If we get over 28 and a half, you'll be looking for a seller up here at 31 and change, which is just up here. Of course, the overnight low, there should be a seller somewhere there. Right? Yeah, it's okay, Hank. You had a pretty, you know, you guys had a baby last week, so you probably haven't slept much. Take your time. Ease back into it. Market's not going anywhere. Right? So the levels are working, 28 and a half. There's a seller there. Right? And the levels, for the folks that are wondering where these levels come from, they just come from cost basis, discount areas, profit markup areas. That's all it is. Right? And that's what we teach at the Trading Syndicate. I'll put in a little plug for the room, right? Come visit us at tradingsyndicate.org. Use the 25% off, right? It's like 50 cents a day, and we'll teach you how to trade properly. We'll teach you how to make money. We'll teach you how to admit you're wrong quickly so you don't lose a lot of money, right? Teach you how to think quick so you don't get stuck in bad business transactions. We'll teach you discipline so you don't blow up accounts. And we'll teach you when to trade and when not to trade. So you don't get you don't get into a pickpocket market. You know those markets when you go long, you get stopped out. You go short, you get stopped out. You go long, you get stopped out. Right? That's a pickpocket market. Right? We keep you out of those. So let's see if we can take out the 6330s. We're creeping. Right? That was a good liquidation. That was a good liquidation. That was good. That was healthy. Much needed. I'll throw the chart in the room. There you go. It's fairly light volume, isn't it, Raj? What is it here? 233,000 contracts? It's good. It's good. It's healthy liquidation. Much needed. Would be nice if we maybe just trade between, it's like 63.20 to 63.40, just back and forth all day. That would be nice. Just go back and forth. I could get on board with that. Yep, the fire sale's going well, right, Travis? They're buying it up. Don't be long if it's under 25, okay? Wait till it crawls back up and establishes itself in that blue zone, in this ugly blue color. Just leave it alone when it's going back and forth like that. Going up to 28.5. I like the edges, Derek. I always get my butt kicked in the middle. Maybe 1 out of 3 trades I'll get lucky in the middle. But I like the edge because it shows me that the business at the edge is done. Right? Now if we accept over 27, it's the worst. In the middle, it's like don't diddle in the middle. It just bites. I've learned that one the hard way. So wait for an edge. And at first it's hard waiting for that edge, right? Because they try and suck you in with those quick furtive movements like oh it's gonna go oh no and they suck you in, but when it does this and comes back over, then you know that they don't need to sell under 26, so you can put your stop under 25 and sell into strength, right? That that quick back and forth price action that like sucks people in. It's like shiny jewelry, It just, you know. So when I talk about these things, it's not like I haven't gone through all of this stuff. But it was even worse for me because I was supposed to know what I was doing, right? But retail trading, switching from retail from institutional to retail is really difficult because the level of discipline for a retail trader is much more than an institutional trader. Because an institutional, and you can be wrong, like 20 grand was nothing. But in a retail account, being offside 20 grand is the end of the world, right? And especially if like you're a distributor like me and something goes wrong and you've got like a trade error for 10 or 15 grand, you're like, big deal, just sell 20 grand worth of stock, right? Just hit it out, boom, they're fine, right? You can't do that when you're retail trading. So you get sloppy, you have no discipline. Yeah, it's not like they teach us discipline in school either. uh, I used to play the outer edges of value until the value area started getting too big, Milan. Yeah, don't be attached to any idea in this business. You know how I learned that lesson was by doing deals. I'd do deals and I'd get idealistic, like this deal's really going to change something. These people are good people and this is really going to work. And, the CEO, you can trust him. And then they'd always do something snaky, right? Like they do an underhanded financing or something like that, and you'd be left holding the bag. And I learned never ever ever get attached to a company, right? And that really helped me when in trading. Don't get attached to a trade. It's you just can't do it, right? Well, it's cleaning up nice here. You've got to be able to get rid of your position and walk away before it takes all your money. It's yeah. You know why it's big moves, Jose? Because we finally got liquidation. After about 4 or 5 days of doing nothing but going straight up, we finally have some liquidation. Now, what I'm hoping is that this keeps up for a day or two, right? That we get some back and forth and we'll get some nice big candles. It's tradable, right? Some decent price action, some decent order flow. Now, if I go to the doctor and I come back and you guys have got this thing back at all-time highs, I'll be pissed. Because it's going to slow to a crawl again, and the candles are going to be like 4-tick candles, right? Right now, ladies and gentlemen, we're in a rotation, right? I look at the B profile and the P profile and all of that stuff. Just guidance, right? It's kind of like looking at the weather report. P profile, we got some short covering. B profile, we have long liquidation into a catcher's mitt kind of a scenario, right? But I can't trade off of it, right? And as much as I love market profile, I can't actually use it to trade. That's why I trade solely off a 1 minute candle, because it's very difficult to trade off market profile. Like right now, where's the trade? Like here, your stops are here, right? Here's your upper stop, here's your lower stop. So if you take a trade here, look at how much risk you've got, right? Catcher's mitt, not myth. Catcher's mitt, like baseball, right? So a B profile is when you get liquidation into that B, and it all gets caught. You could almost call it like a bucket, if you're not familiar with a catcher's mitt, right? It collects contracts, right? And then usually up like this afterwards to get rid of it, right? It's a great tool. But like I say, there's maybe 3 or 4 things that you can use in a practical sense. So like when I do my mentorship program, I do teach market profile, right? But I don't waste a lot of time on stuff that traditional market profile people waste time on, because it's not going to help you make money, right? It's great things they talk about all sorts of stuff like, you know, um, edges and ledges and all of it. Just, but where do you put your buy order? Where do you put your stop? What's the reason? Here, the candles are showing you right here that they stopped selling, right? Look at that. You can see right there at 63.26 and a quarter, they don't need to sell under that because there are buy orders underneath here. So they're trying to get those buyers to pay up. And how much more simple can it be? There are sellers here, so the market is rotating between the buyer and the seller, who are the same people, right? So when they see buyers, they just stop selling, and this is where they compete and sell, and that's why you get that back and forth motion here, right? It's simple. And then you have to put a trade together based on that. So say you were trading, you'd go long, you'd put your stop here, and you know that they're selling here, so that would be your target. Now, it's not the greatest trade in the world, but now at least you can understand the mechanics behind it, right? And if you can understand the mechanics behind the business that you're in, you have a better chance, right? You have a better chance of being successful if you understand what you're trying to be successful in, right? You can't be a doctor and not take human anatomy, right? And that's what we try and do. We try and teach you the basics of how this works so you can put it together and actually make a living, right? Whereas we're not gonna talk to you about moving average crossovers and MACD and Pac-Man and all of that stuff, and it may be valid as hell. But what is the simplest way that you can look at a market, make good business decisions, manage your risk, and not have to memorize 300 patterns that you're not going to be able to use in the heat of battle? How do you train yourself to make money? That's what we're doing. We're training you to make money in a way that is emphasized, where common sense is the emphasis, right? If the trade doesn't make sense, you should not be taking it. Okay? Here, is there a trade to be taken? I'm not touching this. I like this, but right now, there's nothing for me to do here. There's no reason for me to participate in this, right? Because it does not match the terms and conditions under which I do business. So we have very strict terms and conditions. If the trade matches these terms and conditions, then it gets our money. If not, no way. If we're in the trade and one of these things goes wrong, we exit the trade. Right? We teach you to use your orders to monitor for continuation. So say you were long at 26 and you have sell orders out at 29 and they don't get executed. Right? So you're long 26 and you've got 29 sell orders. Right? But nobody's buying your 29. What's the common sense thing to do? You got a lower price. Terms and conditions. Right? So my terms and conditions for a trade are, I need to see that the selling has stopped under a certain level for me to go long. So I'll take that trade and I'll put my stop here. No. I do not use moving averages at all. I keep them on this daily chart because a lot of people like to see them. There's a 50 and a 200, but I don't use them. I don't have a method to use them. Right? I can't use anything unless I've got a tried and true method of using it. Otherwise, it's just a data point. Right? So say I was going long here at 26 or 26 and a half. Well, my stop's going to be under 25, and I know that there's going to be a seller here. So at least you have tactical intelligence about the business that you're doing. You're not taking the trade blindly. That's what I mean by terms and conditions. I only execute when the business does this, then it gets my money. Does that make sense, Matt? When it does this, I'll give it a go. If it's doing this, no way. That way you don't overtrade, you don't get stopped out. The trades that you take are more meaningful. Right? Right? The buyers and sellers are the same people. The wholesaler. Right? So if I'm long 1,000 contracts at 25, I'll be selling them at every tick. Boom, 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 boom. Right? Take me. Right? If you own something at 25, you put it for sale at 28, nobody buys it at 28, what do? Lower the price. Right? It's like those horror movies. You own inventory, nobody's buying. Get out. Right? You know when the people go in the haunted house? Ooh, this is a nice house. Let's spend the night. And then all of a sudden, 3 in the morning. Get out. Get out of the house. Right? If it's a big green candle, you got to buy the offer. Sometimes you're going to miss them. Right? Sometimes you're going to, if that move here happens really quickly, you might miss it. Right? So here are the things. You have to be okay with being wrong. You have to be okay with missing trades. Right? That's part of the business. Right? If I saw this happening and I grabbed it, I would buy the offer because I'd go to buy bid and didn't get anything, right? If that candle's moving really fast, I might just have to go and grab the ask. Right? If I'm not moving quickly enough to capture that move, I miss the trade. It's as simple as that. So in a lot of situations, I miss the trade. Do I care? Nope. I go, oh, I missed it. Damn. Okay. Next. Just keep it moving. You're going to be doing this for a while. You're going to miss millions of trades in your lifetime. right? You're always, if you are, if you can be at peace with being wrong, if you can be at peace with not getting every trade the way you want it, if you can be at peace at missing trades, you'll be all right. Stay loose, you know? Retail trading is a very, very difficult part of finance, right? It's the hardest job in finance because you're undercapitalized, undereducated, underskilled, right? So it's the hardest job in finance. Be easy on yourself. Try and learn a little bit every day. I know I do after all these years, right? Take it slow. Be long-term greedy. What you learn today will make you money, maybe not tomorrow, but it'll make you money in a few years, right? Eventually you'll put it together. And just when you do, then the market changes, and then you have to change again. All right, folks, wrapping it up. Thank you very much for joining me this morning. Have a wonderful, wonderful day. We will see you tomorrow. Stay out of trouble. Thank you so much for being with us here at the tradingsyndicate.org. I'm JJ, vwaptrader1 on X. And guys, in my coaching class, no price action lab today. We'll do it tomorrow. Okay? Thanks, everyone. Bye for now. Appreciate you guys.